Good evening, ladies and gentlemen. Welcome to our Investor Forum. I'm your host, Dan Theok, Senior Vice President of Investment Banking. We're happy to be back to bring you yet another episode in our Investor Update series. And joining me today is none other than our investment advisor, Junior Roberts. Welcome back, Junior.
Great to be here, Dan.
Good. Haven't seen you in a minute. Happy to have you back. Today we'll be discussing PanJam and Carreras Limited, and we're excited to share our insights with you. If you like the content, don't forget to hit the like button and share this video. And if this isn't your first time here, then be sure to subscribe and hit the bell to receive all future notifications. We upload content just like this, just about once per week. Also, if you're looking to embark on your very first investment journey, you should take that first step with Mayberry, of course. Follow us on social media to learn more about how you can get started today. Okay, so up first, we want to do presentations, and Junior, you'll be kicking off with PanJam. What do you have for us?
All right, then. So we will be reviewing the 6 months ending June 30 for PanJam Investment Limited. So for new investors, PanJam Investment Limited is an investment holding company committed to growing Jamaican economy while creating long-term shareholder value. Their primary operations encompasses subsidiaries, joint ventures, and affiliates, and it spans across a portfolio management, hospitality management, and port terminal operations, maritime transport and logistics, and bespoke food and beverage production, farming, financial services, and investments. So let's dive into the numbers. Their gross revenue was 19.34 billion, which is a 90% increase from June 2023 at 9.9 billion. Cost of operating revenue was also increased by 98% to 13.6 billion from 6.9 billion. Net profit reflected 2.5 billion, up 81% from 2023's 1.4 billion. Total assets had an 11% change to 141 billion from 127 billion. As per the company's shareholders report, the improved first quarter results reflected the impact of the amalgamation of JP Global Holdings Limited, businesses that were transferred to the group in the second quarter of 2023. The group has also strategically divided its commercial holdings into 4 distinct segments: property and infrastructure, financial services, specialty foods, and global services, primary, logistics, and operation. The deliberate organization approach will see PanJam Group focusing its resources and expertise to select range of business opportunities. Let's take a look at the stock market movements. Current price is at $49.89 per share with a PE ratio of 24.81. A little rich compared to the average main market price per earnings ratio, but still something to consider to hold in your portfolio. We have a trailing earnings per share at 2 and a 52-week of $53.99 and a 52-week low of $40.11. We'll now move over to our quarterly movement, and I'll ask Dan to share what his thoughts on the quarterly movements of PanJam.
Yep, great. Thanks for that. So we can see again, trailing earnings of $3.2 billion, and you can see how that's made up over the last 4 quarters. And we can see, as you mentioned, the price earnings ratio of 24.81, a little rich, like you said, but a price to book, if you guys look at the key statistics, of 1.06 times. So I think it's fair from a price to book perspective. We're expecting the earnings to grow.
Great performance. And now we'll move over to Carreras Limited. What do you have for us, Dan?
Thanks. Before that, though, let me just share thoughts on PanJam a little bit more. So as you said, it has 4 segments. When we think of the financial services segment, we're talking about their interest, 30% interest in Sagicor. And when we think of the global logistics, we're thinking about their majority interest in Kingston Wharf. So when you look at PanJam, you have to think about it's a huge conglomerate with assets like Sagicor, assets like Kingston Wharfs, in the hospitality sector, assets like the ROK Hotel that just opened up,
Courtyard Marriott.
Courtyard Marriott. So it's a great conglomerate. And I think it's a great stock to have in your long-term portfolio and still good to buy even at this price with over $114 billion of assets. When you look at the top 10 shareholders, you're seeing giants like the National Insurance Fund. And when you think of management, we're talking about people like Jeffrey Hall and Stephen Faison. So it's a great company, great management, great assets, well-positioned, leaders in a lot of the spaces they're in. I'm a big believer in Jamaica as a marine logistics hub. So they're in spaces that are growing. And I really like PanJam to have in your portfolio for the medium to long term. You really can't beat them. And it's good to see businesses that are heavily invested in assets, infrastructure, that are asset rich, that are poised for growth. This is one of the biggest mergers that we've seen in the last 3 years, the coming together of PanJam and JP. So I like it. I think it's still a good buy. And as interest rates go down, as we keep saying, we're going to see PEs going up. But I also think this group is positioned to grow and to grow substantially. And so if you're making to look a large investment in the stock market, I hear a lot of my friends saying, oh, the Jamaican market isn't liquid. This is a business where you can buy 10, 20, $30 million worth of PanJam, put it down, come back in 5 to 10 years, and your investments would have done you well. So it's a big recommendation for me when you're making large investments. So I like it. All right, thanks for that. Next up, we want to look at Carreras Group. Great. And Carreras just changed their year end. So if you recall, we had a 9-month period ended December. And now we've gone into look at how the results have been since that change. And we're going to look at the 6 months results to June 2024. So revenues, $7.5 billion are down 6%. And, this is a mature space and they're definitely fighting against illegal cigarettes. And so it's not one where we're looking to see substantial growth in the future. I mean, albeit I think they could grow their revenues by 30% just by eliminating the illegal cigarettes if they could. But it really is a mature business. And so I'm not expecting great growth. But what you do get from Carreras is great dividends. Number one dividend paying company on the stock market. And I'll get into that. So mature business, a little bit of a decline in sales, 6%, but they tighten up on cost of sales and distribution costs. And we see that shrinking by 16% to $3.6 billion. And the net result is that their gross profit grows by 5% to $3.8 billion, which is great. And controlling the operating expenses, within reasonable limits, 6% growth, which is, because of inflationary pressures. And what you have here is 4% growth in their profit, their net profit before tax, 2% growth in profit attributable to shareholders up to $1.97 billion. So $1.97 billion in profit attributable to shareholders this 6-month period compared to the last 6-month period. When we get to the quarterly graph, what you'll appreciate is in this quarter, this Q2, the profit was actually up 34% compared to the same profit last year. So I love Carreras because they're steady with the profits and even steadier with the dividends. This company has paid out significantly all of those profits in dividends. In 2023, they had a dividend yield of about 8%. And then this year to date, the dividend yield is about 7.35%. So there's no other stock on the market that's going to give you dividends yielding from 7 to 8%, as does Carreras. And once again, with interest rates trending down, I would expect to see the stock price therefore moving. The stock price itself at $9.59 gives you a PE of about 10 times, which is roughly on par with where the main market is today. I expect that main market average to be moving to about 12 times, and certainly for someone like Carreras, which has the potential to increase its profitability further. Growth can come by eliminating illegal cigarettes. Like I said, there's inherently 25 to 30% growth that they could get there. But even if they're flat, it's a company that's going to give you 7.5%, 8% dividend yield. So again, as interest rates go down in the market, this is the type of company that folks will want to invest to who have an interest in getting those types of dividend yields. And if you look at their top 10 shareholders, largest investor in the market, National Insurance Fund, is the second largest shareholder in Carreras. And it's a good move for the NIF because, again, they're securing themselves 7 to 8% dividend yield in a company that's mature, solid, leader in the space, and poised to continue doing well into the future. Total assets down by 18%. Again, no concern there. That's just the aggressive dividend policy. They're not afraid to pay out their dividends. Total equities up by 19%, and that makes my point, growing from $2 billion to $2.45 billion. So this is a company, again, folks, not afraid to pay out their profits and dividends because it's they're doing only distribution in Jamaica, no manufacturing again, so no large capex needs. So, whatever profit they make, they're typically paying out 90 to 100% of that profit in dividends. Next slide shows the profitability by quarter. And again, you can see here in the last 4 quarters how steady they've been, typically, touching about $1 billion per quarter. Had some hiccups, a year and a half ago going through COVID, but in the last 4 quarters, you can see very clearly that sort of like $1 billion is the standard, and I don't expect that to change. Looking at the share price movement, we can see the share price has been relatively flat over the period, and had a low of 814 in the last 6 months, kind of rallied up just a little bit to 959. Again, this is a stock that's been at $13 in the past, 3-4 years ago. I think with interest rates trending down, that this stock price will jump by about 20%, and that would continue to result in a dividend yield of maybe 6%. If and when it does jump, I think interest rates are going to be trending back down over the next 2, 3, and over the next 12 months. In fact, on the balance of probability, interest rates will be going down over the next 12 months. As a matter of fact, we've seen the first rate cut. We've seen a few on the 30-day CDs. 30-day CD rates were as high as 10% 6 weeks ago. Just dipped below 8% recently, and that's a weekly auction in relation to a pool of $120 billion of investment. So there's a significant amount of money out there on 30-day CDs, earning 10% up to 6 weeks ago, now earning less than 8%. That rate's probably going to come down by 200 basis points over the next 3-4 months, and those folks are going to turn and look to other investments that will give them good yield, good income, and Carreras will definitely be an option. So I certainly like it. Junior, what are your thoughts?
Absolutely. Most clients, they definitely purchase Carreras only for the dividend
Right.
option. But based on the time of year, as you were saying, just so perfectly, people will be moving their funds soon, and now is the time to invest in Carreras so that you can get that cap gain. So it's a buy for me.
Yeah, I like it. If you can get 6 to 8% dividend yield guaranteed with regular quarterly dividend payments, and then get into a stock that's also going to give you 10, 15, 20% bump over the next 3 to 6 months, and I think it's a good buy. And again, this is another one that trades with good liquidity, big market cap. You can buy 10, 20, $30 million of Carreras. It really does trade with liquidity. All of the big majors, big pension funds tend to have Carreras in your portfolio. Definitely a blue chip. When you're a large investor in the stock market, you can't help but have Carreras. It's going to be one in your top 10 for sure, and it's usually the one that gives the highest dividend yield, typically followed closely by, say, maybe like a Supreme Ventures or something like that. All right, well, Junior, thanks for that. Appreciate that. Well, that's it for today, folks. Thanks, as usual, for tuning in. I'd like to thank our viewers for their support, as usual. It's always a pleasure to have you on the program. I'd also like to thank Junior, my co-host, for his invaluable insights today. Thanks, Junior. Appreciate you. Well, if you're curious about updates on our Virtual Investor Forum, then find us on social media. We share our live stream dates and our upcoming guests on our official social media pages. Give us a follow to stay up to date with all things forum related. And also, folks, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click on the bell to receive all future notifications. Well, I'd like to remind you, wise investors, slow and steady wins the race. Keep safe, everybody. Bye-bye.